guys. This is the FOAHK Thought Leadership Series by the Crypto Subcommittee. I want to welcome Ben El-Baz. He's the head of ecosystems at HashKey. And I'm Nejteh, Demirian. I'm the head of sales here. So we are going to talk about trends and opportunities of Web3 today.
Yeah, it's a cool, exciting topic, right? It's one of the biggest things happening in in our space.
So when you say Web3, what's the first thing that comes to your mind?
I mean, I think Web3 it's a big topic, right? But the first thing that comes to my mind is really, the future of the internet and the future of a lot of different ways of running, e-commerce businesses, online games, finance. It's very comprehensive. But the first thing that comes to my mind is, it's essentially the next wave of the internet and new business models, right? So super exciting stuff. I mean, there's just the way in which users use these products, use the apps is completely different. I think we were talking about this the other day that there's a cool way to think about how Web 1 to Web 2 to Web 3 has transitioned, right? Like the first generation of the internet and web was kind of you just read. It's like you just read what's out there, right? Web 1.0 is just users can only read. That's the only way they participate. Web 2 is kind of like you can read and write, right? You can both read all the content and then, like social media, right? You can write updates and posts and different things that are happening, right? It creates a new type of engagement, user engagement.
Sure.
And then with Web 3, it adds on this new layer, which is the ownership layer, right? So you got the read, write, own web, right? Which is that users are no longer just reading and writing the content, but they can actually own the output or value that they're creating on those platforms, right? But I can't claim to have come up with that framework, right? That framework actually came from I think Gavin Wood out of Polkadot and the Web3 Foundation. I think it's a good way of thinking about it.
So it becomes more of a stakeholder-based infrastructure rather than opposite would be shareholder-based infrastructure where the Web 2 companies would solely own that information.
Yeah, and because it's so heavy, it's so heavy on the stakeholder incentives. It's really causing a lot of users to really think about, maybe I'll go and explore using some of these new apps, right? Okay. And that's leading to millions of users that are signing for new things and creates business opportunities for investors.
Right. So, what would, from an investment perspective, right? You just raised it. What are the investors going to be seeing in the next 5 years, for instance? What kind of disruptions, transformations, based on what kind of projects that are currently kind of being developed right now?
I think probably one of the biggest potential disruptions, I can't say if it's going to happen in 1 year or 2 years or 3 years, is, if you basically look at the tech sector, right? You look at NASDAQ 100 and you kind of look at the tech stocks. If you're I think it's a little bit arguable right now, right? Because you say, given the current macro conditions, maybe it's a little bit risky to hold tech stocks, right? People risk off whatever. But I think a lot of the Web3 companies, most of the Web3 companies, they're inherently tech companies, and they are over time they're going to siphon off user base from a lot of the existing centralized technology platforms, and a lot of those companies are the good ones are publicly listed, right? So I think you could see it happen to social media. You could also see it to publicly listed gaming companies, because a lot of the action activity that's happening in Web3 apps and Web3 things is they're essentially just verticals and use cases that people are already familiar with, like gaming, like finance, like social media. But the business model is different, right? The business model, the way the users interact with the platform is a little bit different, right? It uses blockchain, it uses token economics, a lot of different things we can get into. But I think that's one thing. I think there's opportunities and there's threats, right? If you look at how investors should look at it, is on one side there's the opportunity vector, new investments and what you can get out of it. Right. The other side is kind of the threats, right? If you're holding existing large holdings in some of these big tech companies, you might want to hedge a little bit based on some of these new business trends that are coming up.
So I think it's kind of like the intermediate step is quite interesting, because there was some legislation that recently passed in Europe, and it was mandating that the communications platforms had to have an ability to allow users to communicate between the platforms, right? And that's kind of like an intermediate step, but eventually you could see blockchain kind of taking the role of the protocol layer there, right, facilitating that communication, and the different apps will be decentralized apps in the future, right?
Yeah.
Is that the kind of transition that we're going to be seeing, like at least in the
I think it's
5-year horizon?
No, I think you're starting to get into it a little bit, which is kind of like what is Web 3.0, right? You hit on it very, very clearly, which is data portability and all these different things. But maybe just taking a step up and breaking into it a little bit for the audience, right? What is Web 3? The usage of new technology, things like blockchain, to allow users to have more ownership over their identity in apps, or their data, or their ability to do things across different apps. So that's a very high level explanation. The types of products and apps that are using this type of thinking are gaming apps.
Yeah.
So there's game Web 3.0 apps. There's also a lot of stuff in DeFi. DeFi is essentially Web 3.0. And there's stuff in metaverse and VR and AR and kind of these virtual worlds. So there's a lot of these different verticals. Going back to your point, I think you hit on it very, very squarely, which is that in places like, Europe has been at the forefront of like data privacy laws ever since GDPR.
Yeah.
Right. So I think the kind of these US based big technology companies, their whole business model from day one has been, let's centralize all the user data, let's lock in the users, and then we kind of like squeeze out as much value as we can from them. And that could be pretty lucrative to shareholders, right? But it's not necessarily always the best outcome for users.
Sure.
And some of the regulations and legislation that are coming out of Europe, like what you just mentioned, make it easier for users to break the lock-in and go to other platforms is, it's one of the central parts of what Web3 technologies allow.
Yeah.
Right?
Okay.
So on one hand, it's beneficial to users,
Right.
but on the other hand, it can be disruptive to incumbents.
Sure. I was talking to a large Hong Kong-based family office just the other day, and the question they came up with was, how much benefit does tokenization really offer, say, the property industry or something? And give me an example of how tokenization or even Web3 can impact their business, finance, right? Asset management. So, there was the discussion kind of led itself to, well, obviously it's like a productivity gain that you're getting out of it. In certain industries, the infrastructure is already developed to such a high level that the productivity gap is going to be very small, and then there's some that have a very wide productivity gap that can be closed. So if we look at it across the spectrum of sectors, right, industry sectors, which ones would you think have the greatest kind of productivity gap, and which ones have the least?
Yeah, no, I think it's a big, there's the traditional industries, right? Things like property,
right.
Supply chain, all these different areas where a lot of, as you just mentioned, like a lot of folks, a lot of investors and also traditional business owners have come to us, come to HashKey and asked, hey, I have this property or I have this existing business. Can I use blockchain? Can I use Web3? Can I use tokenization to create benefits? And I think where we have seen so outside of the 2C space, right? What I was speaking about before this comment was all like consumer-based products, like some consumer finance things, some games and stuff like that. Yeah. On the 2B side, I think what we've seen the most interest in is still, I think, both financial applications,
right,
and real estate. But I think specific to real estate, it's more of I would say more of like a subsector of real estate and property that people have gotten pretty excited about, and that is, for example, property or real estate, like commercial real estate that's being used for generation of sustainable energy or renewable energy.
Right.
I'll talk a few specifics on that. We've been working on a few Web3 projects where the asset owner has property and they have buildings, and they're looking at potentially basically a renovation of the building to have more sustainable energy or more usage of solar panels and things like that. And they want to, in this particular project, there's a potential opportunity for them to go for green financing.
Right.
But they need to prove that whatever, the usage of the funds are being used for something that has real environmental, real environmental impact, right? So things like technologies from Web3, to your point around productivity gains, in that particular project, the asset owner doesn't have to spend as much money on field auditors, like people in the field checking that everything's
proving that they're actually providing the kind of green, generating the green energy that
you're doing what you said you were doing, right?
Okay.
So in the context of a financial instrument, we're raising money and things are tied
to that.
It's important that you prove what you're doing. And I
Right.
think the big thing about blockchain technologies and the use of IoT and all these things combined is that you're able to very quickly prove that something was done, and because it's stored on blockchain, it's tamper-proof, right? So it reduces the risk that someone kind of maliciously edited, that information.
So we're seeing projects like that now. Right? That's happening now.
Yeah.
So imagine we forecast 5 years from now. That would be, there would be significant volumes of data and projects associated with this technology, and it's got to need a venue to be kind of traded. For instance, right? That's the next kind of phase of this.
Yeah, I think that's one of the big visions behind what HashKey has been trying to do in Hong Kong,
right.
Which is setting up a regulated licensed exchange for the trading of these types of assets, right?
Okay.
So with the acquisition of that approval and principal license back in April, that puts us in good position, right? But I think the future, a lot of folks in Silicon Valley, I spent a lot of time there, like a lot of folks in Silicon Valley who are close to the space around Web3, like their big theory about the future is that, whatever, the being able to tokenize many different assets in your life or in your business or in games will lead to like proliferation of all these different assets that need to be priced against each other and need to be exchanged against each other.
So it's like a barter economy essentially that we're reverting to.
Yeah, reverting back to the old
barter
days.
Economy, except the cow is like unitized now.
Yeah.
So you don't really need to sit there and trade a whole cow. You can trade pieces of it for future value.
Exactly.
Is that how it kind of?
And that's in terms of like the business opportunities and what's out there, right? Like if you see the future where Web3 and blockchain and tokenization allows for a number of different traditional assets and digital assets to be tokenized and traded, they need to be traded somewhere, right? So if you apply like the picks and shovels investment model, right, you want to figure out, where can I invest at the infrastructure level to take advantage of that future? So
what are there? What are the investment opportunities that can investors can take advantage of right now that's going to give them access to kind of generate a return for the next 5-10 years?
I think in the Web3 space, there's different ways of looking at it. Yeah. One is the marketplaces, like the exchanges where these things are being traded. I think that's still one of the biggest. That category of business has generated the highest returns.
Cash flow generative.
Highly profitable. Yeah, exactly. So the exchanges are still quite, but you have to be careful, right? You saw like recently in the U.S., like some companies that aren't highly regulated can have some issues like that, right? So you do need a level of risk management on that particular use case. Beyond that, I think if we look at took the picks and shovels model, the infrastructure, in Web3, I think what's unique about it is a lot of the times the product is like a protocol, right? So what you have is smart contracts and a protocol that's really exchanging the value of these different transactions, and then app developers build on top of that. But you can have a situation where one Web3 protocol is powering a number of different apps.
Sure.
Right? So investing in the protocol layer
gives you access to that.
Yeah, it gives you access to it gives you access to the flow of all the apps that are being built in that. I mean, case in point, like one specific case on that is, we're pretty close to what's happening in, our company is pretty close to Ethereum and early investor and all these different things. Kind of the future of the Ethereum network. Ethereum is the biggest public blockchain out there. A lot of Web3 apps are built on top of it. But even Ethereum, like long term, it's upgrading, and one of the future phases of the Ethereum network will allow kind of all these different, they call them app chains or shard chains. So you have all these new apps in the future that would be still having to use ETH and all these things for the processing. Yeah. So even something very simple as there's different ways to gain exposure to Web3. Even something as simple as just being long ETH,
right?
Like long Ether, over time still gives you access to all of the flow and the demand for all these different apps that are built on the Ethereum
And as
blockchain.
the demand increases, the value of the chain increases itself, and you're participating in Web3 without actually having to look at certain companies or other projects that are going to be growing quite significantly and disrupting other businesses.
Yeah.
Right?
So if I looked at like in that category, I looked at Ethereum, like the upgrades, like just that as a specific example. It's a little bit
When is the upgrade? When is the upgrade happening?
That's the first. I think the most. The most immediate upgrade will happen in end of September.
Right.
So that is they call that the merge, and basically after that point, there'll be. So right now in Ethereum, you can actually do something called staking. So if you were to believe in this long, Ether. No, this is not financial advice. I'm not telling people to go out and long Ether and buy Ether. But if you were to make that play, and you wanted to hold this asset for a long period of time, the nice thing about Ether with the upgrades is you can actually stake those assets and generate these returns, and there's a lot of unique opportunities out there.
Let's rewind one step. Maybe some of the viewers might not know. So the upgrade is taking place from proof of work to proof of stake, right? So everyone's probably familiarized with how Bitcoin actually is generated, right? You got the miners sitting there and actually continuously generating. So Ethereum's making that transition.
Yep.
Right now, it's the proof of stake model that they're going to be adopting for the next upgrade, right? And then there's the way in which they promote that is by providing staking yield, right? Which is it's some kind of yield generated on the Ethereum 2.0.
Yeah, so it's one of these opportunities again. Like I wouldn't necessarily call it like investment opportunities, but they're kind of like yield generation opportunities or like ways to invest in ways to deploy capital, right? Which is in a lot of these Web 3.0 blockchains. I mean, in the past, right, if you look 2 or 3 years ago, people would say, oh, you buy and hold Bitcoin, that's ways to get exposure. But now what you can do is like if you really believe in the future of Web 3, at least you want exposure to it, you can buy individual coins, you can invest in companies early. Or what you can do is you can, there's some interesting plays you can make where if you believe that something like the Ethereum network and the use of Ether is a good, picks and shovels
proxy for the entire Web3
you can say, okay, I'm going to hold this asset for 2 or 3 years, 4 years, or whatever.
Right.
And what's nice about Ethereum is like what you just mentioned, right? Ethereum is changing the way that the blockchain works, so that instead of using the old proof of work model, use proof of stake, right? So what that means is that users can you basically stake or you deposit your ETH, and then you can run some software to contribute to the validation of the transactions on the network.
So that's pretty complicated though, right? So, what are the mechanisms in which you can actually buy the Ethereum, participate in this staking that generates yield at such, if you at such levels that we are at now, and then expect to ride the entire kind of capital appreciation of the asset?
No, I think this is actually really, really important topic even for this session, is that that process that I was just going through, it's not easy. No, it's not even easy for me, right? Like for the average Joe, or even for
sophisticated investors, right?
Even for sophisticated investors or institutions or private wealth, like you don't want to have to go through that whole process, right? You have to, first of all, you have to get Ether, and then you have to hold it in a wallet, and you have to manage your own wallets, and then you have to send it to this contract, and then you have to run this software on your computer 24 hours a day, right? It's not a simple process. So what's happened in the industry is that service providers have grown where they provide that service for you, right? So in Ethereum, we call it Ethereum 2.0 staking. What institutional clients could do is, if you acquired Ether, you could then go to a service provider to stake that Ether, and they'll do that that computer validation process on your behalf without you having to do that. The only caveat of that is currently in the Ethereum 2 staking environment, is you have this lockup, right? So it's never good to have to lock up capital. It becomes a liquid. But what's nice is people have come up with products to solve that problem
as well, right? So there's like liquid staking Ethereum, which is legally regulatory compliant, and there's different groups doing it right now, right? Yeah,
liquid. So I guess I think this is a good thought leadership series for the crypto subcommittee. It's always good to like bring up kind of like what's most innovative in the market right now.
Right.
So what you just touched on. Liquid staking is it's a way for a token holder
Ethereum holders
Ethereum holders to participate in this staking process. You earn that staking yield. You don't have to run these computers; someone else is running that on your behalf. And instead of locking up your assets, you get this transferable. You get a transferable token that you can trade on the secondary markets if you want, right?
Okay.
So you can so the way that would work is, let's say day one, you buy this token, you hold it, and you're generating these staking rewards. And let's say day 100, for some reason, you need to exit liquidity, right? Instead of holding it and continuing to be locked up, you could sell out of it.
Right.
Yeah.
So it makes it really easy for institutional guys and family offices to just sit there and kind of participate in staking without having to develop the infrastructure around it, right?
Yeah.
Yeah. It's actually, it's pretty sophisticated in what's already built out in the market. Okay.
Yeah.
Well, that's. I think we're getting quite close to our time here. So I just, thank you very much. Thanks, Ben, for joining today. To our audience, thank you very much. If you have any concerns or questions, please feel free to ask the FOAHK and HashKey as well.
Great. Thanks.
Thank you.